Data from the Nigerian Exchange shows total transactions at the nation's bourse rose 133% year-on-year to 1.81 trillion naira in the month of July. Now, domestic investors outperformed foreign investors, driving 92% of equity deals. Folagbade Adeyemi, Managing Director at Anchoria Securities, joins me now for more on Nigeria's outlook for the equities market. Thank you so much for joining us on the show today.
Thanks for having me.
Breaking down this domestic and foreign portfolio participation in equity trading numbers at this moment, really showing the significant increase we're seeing in terms of the value of domestic transactions. According to the NGX, this is due to block trades. But from your assessment, what's driving the numbers here?
I think it's a general resurgence of the market. There's been quite a lot of interest in terms of building, in terms of developing wealth and ultimately wealth creation across board. So, and the interesting fact for me is beyond the institutional space, we have also seen a resurgence of the retail space coming back into the market, which is good news for us. And you can also pull this back and look at how the capital raising efforts regarding the banking consolidation and just raising that capital base has also impacted the general knowledge and the fact that everybody's pouring back into that space. So yes, there's a lot of institutional influence on the back of the fact that yields were also moderating in the first half of the year, and ultimately forcing that interest and inflow back into the equities market. But ultimately, like I said, it's really been a resurgence of the market generally across board. Institutional investors are back, institutional and retail investors are back. So that's really just pushing and supporting the market. You also have quite a bit of narrative, a lot of good news, really giving momentum to the market.
And talking about this good news, I was going to ask, how long do you think the Nigerian market can sustain this flow of hot money, the FPI flows at this moment?
So I think, just like we were discussing right before now, there's a general interest in the emerging markets. There's a look away from the let's call it the American and European markets, just because a lot of things are happening there. You look at the fact that the Fed has a 4% rate in terms of what is happening there, and that has ultimately pushed a lot of people out of their comfort zone in terms of the foreign markets into the sub-Saharan markets and emerging markets, and that is the first thing. So effectively, there's a lot of interest in sub-Saharan Africa. Now, the question is, why Nigeria? Why is that interest now landing on Nigeria at the moment? And that's just the back of the fact that the FX reforms have come to stay. We've seen stability around FX. Crude, we're pumping crude, and ultimately that level of production is being sustained and is helping us. So the speculators are out of the FX market. But more importantly, I think the truth is there's just everything is coming together, a confluence of good things to support the good macro situation in the market. And because of that, flows that typically would have gone elsewhere to maybe say Ghana or Kenya or even South Africa is now having an interest in Nigeria.
Yes. And then when we're looking at how market interest playing out at this moment, we also have investors keeping their fingers crossed, awaiting the release of the Tier 1 banks' earnings, H1 earnings. For you, what do you think they'll look like?
So ultimately, I expect good numbers. Ultimately, the shocks of last year have been moderated away from the market. So ultimately, the balance sheet is looking good. They've raised the additional capital. Risk assets are being more aggressively pursued, and rates are holding steady. So I don't expect that anybody will be underperforming at this point in time. So ultimately, I do believe that there will be additional volatility, at least for the people that have already positioned, should be reaping the rewards of that positioning now for the Tier 2. So ultimately, markets is driven by a lot of things, market information and corporate actions. So with the announcements of additional things like interim dividends and whatnot by maybe the FUGAs first effectively and then the Tier 2 banks, we should then see a lot of rally.
And talking about announcements as well, too, the Fed's also under intense pressure at this moment. The Trump effect is really running the market at this moment. But coming down to Nigeria and our West African markets, it's looking like September is going to be the month of rate cuts. In terms of sectorial sensitivities, that's on the other hand, but how do you think these moves might impact the equities market?
No, I think it's a very important point you just raised there. The question really is, yes, I would expect that we should be considering rate cuts, but I wouldn't say we should do it as of now, right? Because one of the reasons why FPI is also here is because it wasn't just the equities market space alone, the debt market, and we had high rates that kept people within the markets and within the market space. So I don't think, whilst the conversation should be happening about the rate cuts, I don't think it's the appropriate time just yet. I think we should still hold a little bit longer. And if we do have those rate cuts, what I would advise the MPC at this point in time is not to do anything too drastic. Again, you want to keep that FPI here, you want to keep the activity up, and just really just push the Nigerian markets as much as possible, because really now is the time to be looking at the equity space and really securing capital formation for the next couple of years. If you're going to reach that 1 trillion economy that we're talking about, you need to have the capital market really be active. You can't raise a lot of capital based on debts. So yes, you need that equities market to really be firing to help create as much capital for yourselves and any issuer that wants to raise capital.
And talking about firepower at this moment, it's also quite intense competition when we're looking at the performance from the Ghana Stock Exchange and then looking at Nigeria doing about a year-to-date performance of 37%. We were just about 37.7% last year cumulatively. Ghana is shooting higher, above 50%. Your take around how we'll see these numbers play even further?
So, I mean, it's a good problem to have, choosing within the same sub-region. I look at it as someone who's proudly African, that Ghana is doing particularly well and Nigeria is also catching that same wind. In terms of where things stand, I still believe the equity market has some legs to go. I believe that the capital raising efforts that we have and the fact that this current government is really focused on really promoting growth means that the focus on the capital market is also always going to be there. You have the Brazil trip where we're advocating for FDI, and the good thing I like to see is that the NGX is also side by side in terms of that FDI solicitation and advocacy. So ultimately, I do believe that the market would still, on the back of this, still maintain some level of momentum. But obviously, we have your volatility in between, but I still believe that the market will continue to maintain.
And then the picture for listings, and when we're looking at the depth of the market at this moment now, the concerns around borrowing plans are also having the intense look at this moment. You take around the market depth we have here, and then looking at the outlook for listings. Yeah,
outlook for listings, I mean, one thing is already pretty clear. This is probably the worst kept secret in the market, that Dangote Refineries is trying to come to the market. But I also believe that quite a number of additional listings, which is why I said...
Dangote is one of those.
Yeah, exactly. So the truth is, if you continue to have this momentum, part of the things that you need to have is also to have the primary markets come and take away some of that flows, absorb it, and use that to propel the economy forward. So ultimately, additional listings in the form of refineries, for all you know, maybe another telco might be on the horizon, but I think consumer good is also going to be one of those things that will be looking to really capitalize on this situation as well. So consumer goods, industrials, without naming anybody, those are the key areas that we expect at least in over the next 6 months at least.
Interesting conversation, Folagbade. Thanks a lot for your time. That was Folagbade Adeyemi, Managing Director, Anchoria Securities Limited.